There we go. Just change screens again. Okie dokie, let's just move that out of the way. There we are. Move my chat box down. There we go. Hope that helps. Neville, I've answered you in the chat box, but if you need any more help, just drop us an email. Either myself, David at quantumtrading.com, or Anna at annacooling.com. Either of those will find us. Just to pick up on where we were with the CAD yen, we're starting to see the reversal coming in. Here we are on 3 minutes. So, you know, as I've said many times before, my eye was drawn to the top and bottom always because I'm looking for reversals, because I'm a greedy so-and-so and I like to get in early. But it doesn't suit everybody. But you can see here the CAD is starting to roll over. The yen is rising quite strongly. The yen is rising strongly here. Hasn't started to kick yet here. Just starting to flatten out a little bit here. So if we go back onto the charts, let's have a look, because I've put the CAD yen on here. Here we are. This is the reversal setting up on the faster time frame. So you're up on 3. There we go. Starting to take off there a little bit. Hasn't changed on the trend monitor yet. It's a bit early doors. It certainly will have done over on the 15-second chart. And this is really what it's all about. Are you a scalping trader? Do you like to trade slightly slower term frames, 5-minute, maybe 50-minute? Are you out to the hourlies? What is it? What is it you're trying to do? And what are you most comfortable with? This is a perfectly valid trade, scalping trades. I'd say as a general rule, if you're down at the very fast levels like here, you're going to be generally trading bigger size, because the quid pro quo in that scenario is small pips or small ticks or small points, bigger size. So you're going to be trading bigger contracts for a much shorter space of time and really truly scalping the market and taking a few ticks or a few pips out of the market. That's your business. That's your preferred way of operating. Perfectly valid. And it's just a nice example. You know, it looks a decent move. You got from 73 to 68. Now, obviously, the caveat to that is you can only do this with certain pairs, because if you're going to try and take that approach where you're trading a pair which has a big spread, maybe a 4-pip spread or a 5-pip spread, it will not work, because you are trading too much with a disadvantage. You're trying to recover the spread and then take a couple of, it doesn't work. So you've got to pick your pairs with care. You've got to pick those with tight spreads. You cannot do this on I was going to say cross-currency pairs. It depends. It also depends on the broker you're using. If you're using a broker that offers tight spreads across the range, then you know it's possible. You've got to make that judgment call. But if it's, you know, if you're up in the 4s and 5s, it really truly is going to be very difficult taking this approach. Nice volume under that candle. That looks pretty positive. You saw the trend monitor here just flicked in and out. It went into darker blue, giving the indication that potentially this was triggering a reversal, but it's now gone back into red. So if you're trading on the short side, you know, it looks all pretty positive at the moment to hold that position as an intraday scalping trader. Now, what I wanted to show you is, I'm just going to pull these over, because these are reversals based on a variety of things. These are annotated examples that we've used all over the place, some in the private chat room, some of them on public. This was one from non-farm payroll the other day on Friday. Just a classic example of, this is a trap move. This is not about, this is really nothing to do with volume or price analysis or anything. This is just a trap move. This is basically the release of the data at 1:30. This was UK time. And then an hour later, we have the open of the US physical markets themselves. This is on the NQ, so it's an E-mini futures contract, the NASDAQ 100. But the principle is identical. You get the volatility trigger, the trap move, the lack of participation, more volatility, bang, all these traders jump in on fear of missing out, and bang, off it goes down to the downside. The cash markets then open. What do we get? Exactly the opposite. We get a volatility trigger. The news was bad. Traders jumping in, thinking this is a great opportunity to make some good money to the short side. We get a ton of buying coming in under this big hammer candle, and bang, off we go. And by the end of the day, we're back up above the level that we were up earlier in the day. It happens. That's what the market makers want you to do. They don't want to make money for you. They want to make money for them. Just have a look at another couple. This one was the pound yen, 15 minutes. This is a session crossover reversal. Here we are, 7 o'clock UK European time. This is the European Open. Looks like a decent move. Volatility trigger comes in, bang. Then we get the next candle, ton of volume underneath, big wick to the upper body. Which way is that going? Only one way, south, and off we go. Nice move. But all these traders here will have jumped in on the expectation of the market going higher, and it hasn't just reversed straight off that. Let's just have a look at a couple more. That's that one. What was this one? Let's have a look at this one. This was back to US markets. This is the YMs. This is the Dow on 5 minute. And again, you can see this is a nice volume reversal. Market reverses, we get a volatility, we get a follow through, good volume under that candle, so it's perfectly valid to trade that. Then what do we see? An absolute ton of shed load of volume coming in under this candle. It's an anomaly, because if it weren't an anomaly, we should have had something like this developing, and we haven't. We've got a narrow spread, wick to the lower body, and a ton and a half of volume coming in. It's a classic reversal. It's a reversal based on volume price analysis, and off up we go, and a ton of points made just trading that one. Very simple, very straightforward. Let's have a look at one more. This is the Aussie yen. Can't remember what day this was, but this is on 10 minute Aussie yen. And again, you know, it says it all there. Again, this is a volatility trap. The trigger comes in, traders jump in that, thinking this is nice, easy money to make. What happens? We get the volatility trigger, bang, we get a doji candle, indecision, and then off to the upside, and away we go. And all these traders in here either stopped out or close out because they made a loss. It's very, very straightforward stuff, but there are many, many different ways of looking at reversals, and we're going to cover them in more detail. Here's one more. It's the last one. Another nice example. Again, back to the YM. This is on 5 minute. Again, I don't know which day this was, forgive me, but we trade so much, you lose track of the days here. This is the open. This is 1:30. We had some news release came in at 1:30 US time, or UK time rather. So this was the release of fundamental news in this case. Bang, volatility, follow through on this occasion, and then we get the buyers step in. That's it, bang, up to the upside. There we go. So there we are. Move those out of the way. Let's just clear those away as well. I don't know why they hang over the side there. Get those over there and move that one. Go away. There we are. That's gone. There we are. So this is this is what it's about. It's a question of whether you're comfortable trading reversals or whether you're not. You know, are you going to go looking for them, or are you going to be looking to jump on the trend once it's underway? So we're going to wrap up there. We've been going just over the hour, so I'll just see if there's any more questions. Hopefully caught up with those. Okay, brilliant. We're up to date with the questions. That's fantastic. Just to run through very quickly all the bits and pieces. This is where you'll find the Forex education program. It's at quantumtradingeducation.com. It covers literally everything you need to know. The clue is in the title. You will learn everything about fundamental, relational, the technical, how to trade, the mechanics of trading. There's a vast array of VPA chart examples. We teach you how to use the indicators. We show you how to pull it all together. There are topic webinars with Anna and myself. There's a complete webinar library. There's a huge array of webinars in there, which we recorded live for you, and a massive amount of resources in here, recommended resources. And we will be adding to this over time. You do, of course, get the full set of trading tools and indicators. And in addition to that, you also get an invite to our private members group, where you're more than welcome to join all our other students. It's a very friendly environment. It's very supportive. Anna and I are there all day, every day, pretty much. And we are always happy to support and hear from our traders. And it's a great group. It's very friendly and very supportive, as I say. And it just, once you've done this program, this is the gold, what we believe is the gold standard of Forex education. You will come out with the confidence to trade these markets in whatever way you choose. And we go through all the tactics. One of them is, of course, reversal trading, which we cover in detail, but there are plenty of other approaches to the market. So we teach them all for you, and you then decide what suits you. This is Anna's site, where you'll find all the books up on Amazon. And for the software, this is all here at quantumtrading.com, indicators for MT45, for NinjaTrader 7.8, and also for TradingView. TradeStation is coming along. Sorry, it's taken a lot longer than we anticipated, but we are getting there. We're currently working on the enablement back end, and we will have that launched in the next couple of months, of which there are two versions. 9.5 is the partnership between TradeStation and Interactive Brokers, which works brilliantly. You are basically trading all the great bells and whistles of the TradeStation charting package, but you've got it driven by Interactive, so you can trade through the screen. It works brilliantly. I've got it running to my right-hand side. Works fantastically well, and you've got all the advantages of trading a really, really deep discount broker like Interactive. They are massive. It's not a recommendation to go and trade with them. It's just simply saying that's one of the accounts we use, and they are fantastic, and it's a great combination. The other platform is TradeStation 10 version 10, which is TradeStation Securities. You've got radar screen, you've got all the fantastic bells and whistles of TradeStation with all the indicators, and we are looking at developing 1 or 2 new ones as well. So that's it, me done. If you want to get in touch with us, we always like to hear from you. It's david@quantumtrading.com or anna@annacooling.com. Do drop us a line if you have any questions. Alternatively, get onto the guys at the help desk @quantumtrading.com, and they will be more than happy to sort out and answer any questions you have. Thanks very much indeed for coming along today. Hope you've enjoyed it. We will see you again on Thursday at 5:15 for the US future session. Enjoy the rest of the trading day and the rest of the trading week, and stay safe and well in these difficult times, and bye for now.